Hello viewers, we'll be going over silver futures. In this video, we'll be going over the day-by-day probability model, the percent comparison, how we find the models, and the forecast model for silver. So back to the technical analysis, today we're down 6.7% on the 1-hour chart. We are currently oversold on the 1-hour RSI. The 4-hour chart, we are also oversold. And if we expand out to the daily chart, we see the same. Oversold on the daily chart. So overall selling throughout the broader market, the indexes, gold, and oil as well. And at the moment, where we may see support, we may need to dip a bit lower. We see a possible support that dated back in June 21st, 2019, around the price of $15.35. So that is our immediate support. And if we do manage to make a reversal and head up higher, the next resistance that we may encounter will be the 200-day moving average, this green line, and the 9-day moving average, this blue line. And they concentrate around the price of $17. So if we were to, say, move down lower, that price movement is roughly around, I would say, 2% down. And to the upside, that is a 8.9% to the upside to hit back to the 200-day moving average resistance. So as for the day-by-day probability model, again, this model is now available in the link below, so do check it out. So as the days progress to the 7th day, we see that we have a 22% chance for silver to climb higher between 0 and 2%, and another 22% for silver to climb between 2% up and 4% up. In the extreme case, we have a 33% chance for silver to climb higher between 4 to 7% higher. On the downside, we have a 22% chance for silver to fall lower between 0 and -2%. And if we head back to the day-by-day forecast to see where silver model will head to in the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that's best matched to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to April 3rd, 2007. to June 28th, 2007. So let me point out why these two charts are similar. So what we have here in the beginning of the trend, we started off at the upper Bollinger Band, and then we proceeded to dip lower to touch the bottom Bollinger Band. So let's just mark all the instances where we touch the bottom Bollinger Band. So we have our second one there, and our last one right at the end. So we have 3 instances, and we have an instance where we see a touch at the upper Bollinger Band, a second touch, and then finally in between we see a slight reversion to the mean to the middle Bollinger Band. So we have those points there, and in the trend in question we see the similar patterns here as well. We touch the upper Bollinger Band at the initial start of the trend. Let's just mark all the instances where we touch the upper Bollinger Band. So we see the second one there. Now let's mark all the instances where we touch the bottom Bollinger Band. So we have one there. And finally, we see the last one right towards the very end. And what we have are these points. And in between them, we see a reversion to the mean at the middle Bollinger Band. So it's almost quite similar patterns what we have here. We have 5 points, but on this instance we have 3 points where we touch the bottom Bollinger Band. So take note of that. In this trend we have 6 points compared to the 5 points that we just examined. Overall, mostly it's somewhat similar, so do take that into consideration between these two trends. So the trend that we just examined was April 3rd 2007 to June 28th, 2007. Back then, silver was up 3.4% or 3.8%. If we head back to the day-by-day probability model, that coincides with this standard deviation of 22% chance for silver to head up higher between 2 to 4%. And if we examine on the percent side, the model that we just examined was April 3rd, 2007 to June 28th, 2007. As you can see, the current trend, we're down 20%, up 0% from monthly low, down 7% from 10 moving average, and another 7 or 10% down on 20 moving average and 11% down on 50 moving average. And we see less of a decline on the monthly side and slightly higher on the monthly low, slightly lower on the moving average bottom, and slightly lower on the moving average 20, and 50 moving average is slightly lower than the current trend. So do take that in consideration. Again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.